Profit and loss statement. Practical example. Welcome to this practical training on the profit and loss statement. My goal is not to teach you accounting, but to help you use the numbers as a tool for making business decisions. If you're an entrepreneur, manager, or business owner, this report can make the difference between growing or disappearing. Session objective. Before we get into the numbers, let's clarify something important. The goal of this session is for you to learn how to read, interpret, and use the profit and loss statement, not to satisfy the accountant, but to better manage your business. Let's work with a practical example. Imagine a company called Nova Imprint. It sells professional services, has good revenue, and everything seems to be going well. But the owner has a very common question. If we're selling so much, why is there so little profit left? Income statement. This is the company's income statement. This report shows what happened during a specific period. How much came in, how much went out, and how much was left. We're going to analyze it step by step, just like a financial director would. Revenue. Let's start with revenue. Here we see that the company sold 8,689 units. But the key question isn't how much it's sold, but when and how it recognizes those sales. In services, you shouldn't always record everything immediately. Recording revenue prematurely can make the business look healthy when it's not. Cost of service. Now, let's look at the cost of the service. Here's everything that it actually costs to deliver that work. Fees, time, resources, materials. This number is key because if the cost grows faster than sales, the business will fail even if it's generating more revenue. Gross profit. Gross profit tells us how profitable the business is at its core. Here we see a margin of 22%. When we compare this to the industry average, which is close to 30%, a clear signal emerges. The problem is not selling, but rather how the sales are made and how the service is delivered. Operating expenses. Now we move on to operating expenses. These are the costs of maintaining the business structure. The question every entrepreneur should ask themselves is, do these expenses help sell more, or do they simply keep the office running? Operating profit, EBIT. Operating profit tells us something very important. Whether the business is profitable before interest and taxes. Here the answer is yes, but with little margin for error. A drop in sales or an increase in cost could quickly wipe out this profit. Interest and taxes. Here we see the impact of financial and tax decisions. Poorly structured debt and bad tax planning can eat away at profits. Many entrepreneurs focus on selling, but forget that the way they finance their business also matters. Net profit. This is the bottom line. After all the effort, the company earns $248. And here comes the most important question. Is the risk, time, and stress worth this profit? Key decisions. This report is not meant to be filed away. It's meant for making decisions. Here, the entrepreneur can take action, improve pricing, reduce costs, adjust their business model, and strengthen the business. If you only look at sales, you're guessing. If you understand your profit and loss statement, you're leading. Financial intelligence is not optional for the modern entrepreneur. It's a form of leadership. If you like this video, please share or comment. Regi, Imprend Group, and Infis Group.